Hello everyone. This is Stacy Gorkoff from Ineco, and I'm excited to welcome you to this webinar titled Driving Banking Engagement with Customer Analytics. Just a reminder to all, today's webinar will be recorded for playback, so that means you do not have to take a lot of notes. The presentation will take about 40 minutes, and then we will open the floor to questions at the end. If at any time you do want to submit a question, there is an Ask a Question button at the top of your screen. Simply hit that and you can enter your question. And as I said, we'll be sure to address them all at the end of the session. So let's get started. We are lucky to have two fantastic speakers joining us today, each with deep expertise when it comes to understanding the banking landscape and the growing importance of customer analytics. So with us today, we've got Celent's Banking Practice Senior Analyst, Bob Mira, and Ineco's VP of Product Management, Kambiz Esrar Hagigi. Bob, thanks so much for joining us today. We're extremely excited to hear more about your research on ATM delivery channels and customer analytics.
My pleasure. Good to be with you. Thank you.
And Kambiz, also a big welcome to you. We look forward to hearing about your recent work with financial institutions and more about the reasons behind bringing the Ineco Analytics application to market.
Thanks very much, Stacey. Good morning, everyone.
Okay, so let's move on to the agenda. And as you can see, today we will be discussing a number of different things. We'll be talking a little bit about the top retail banking priorities and what is really driving this need for customer analytics. We'll also look at where banks may be falling short on their ability to gather this data and really utilize it in a way that helps them make actionable decisions. We'll also look at how vertically focused analytics applications can be applied by banks, and then diving a little bit deeper into the whole science of what is transaction data. From there, we'll move on, and Kambiz will share with us an Ineco Analytics use case demo, and then provide a summary of recommendations. At that point, again, we'll open up the floor. Questions are always welcome, and we hope to address them all, and we'll leave enough time to do so. And with that, I'm going to turn over the presentation to Celent's Bob Mira.
Terrific. Thanks very much. So with a slide of this title, that kind of suggests that I believe we have some problems, and it's not so much that as much as opportunity. So the context here is customer analytics is not particularly a new topic. Business intelligence platforms, for example, have been around for quite some time. But the state of the art, the capability of these platforms, and the growing variety of use cases are all changing. And so it's this more modern, more evolved type of customer analytics to which I refer in this presentation. And so the short story before I dig in is this. Celent's conducted a fair amount of research over the last year or so on the topic of customer analytics, particularly in retail banking. And so while analytics is highly regarded, our research suggests that adoption is rather lagging. And so what I'd like to do today is shed some light onto why we think that is, and what you can do about it, and what you can do to get started with frankly, a minimum of headaches. And so today's content is copyrighted. Please keep it to yourself. I'll start with this assertion that customer analytics has never been more needed and has also never been more viable. And the context for saying that is an examination of top retail banking priorities. Now, I'm showing some results here from an October 2014 survey of North American banks and credit unions, but I could have shown probably 3 or 4 other surveys over the last several years, and they would have shown a very similar profile. Now, this question comes from a forced ranking, and what's being shown is the percent of respondents that rate each of these priorities as number 1 or number 2 in the ranked order list of 5 choices. And so it's really clear that while banks have a number of things on their plate, and if you mess up badly in any one of these areas, you're likely to lose your job. But above all, growing top-line revenue is on every bank's radar and ranks among the highest of strategic priorities. That said, we think there's three reasons, at least three, where customer analytics is both never more needed and viable. And the first is that it's a canned term, I know, but the new normal of this persistently unfavorable retail banking climate. And we're in this mess for reasons that you know all better than I. But as I speak with and survey banks, there seems to be kind of a growing concession that it will be forever difficult to grow top-line revenue, and banks simply need to explore more efficient and effective ways of doing so. The old sales models won't work anymore. And secondly is the imperative for customer centricity, and I offer it as an imperative based really on two things. One is the rapid and sustained growth of all things digital, of these seismic changes in consumer preferences and priorities that are taking foot traffic out of branches and driving up engagement through digital channels, and virtually every bank on the planet is seeing that to varying degrees. And the idea here is that this shift is at odds with banks' historic reliance on the branch channel for sales and service. Now, I'm not anti-branch at all, but what I am suggesting is banks need to fundamentally learn how to sell and service digitally, and that's something that most banks have never even tried. Instead, right, the digital channels were there for migrating low-value transactions away from the branch, right? They were a cost takeout. They were a convenience play for consumers, not thinking for many years that those channels would be primary sales and service channels, but that's exactly where a growing number of your customers wish to take it. And thirdly, addressing the viability of customer analytics. These aren't the old days where one needed a multi-million-dollar SaaS or IBM Cognos implementation and a whole room full of data scientists to get started. Instead, general-purpose platforms have given way to literally a bevy of pre-configured applications designed to address very specific use cases, and with much of the heavy lifting already done for financial institutions. So we think these three factors together will advance customer analytics from what it is today, and that is a project undertaken by, frankly, a small minority of banks, into a core competency among the majority. And we think it's going to happen over the next 5 years. So in our surveys, we see banks really warming to customer analytics, both as a way to grow revenue and as a way to fundamentally compete. And that's probably not surprising in light of the kind of broad-based thirst to grow top-line revenue. In that same October 2014 research I mentioned earlier, Celent surveyed financial institutions and found vis-a-vis what technologies will be most important in delivering the top retail banking priorities that I showed earlier, we found, probably to no one's surprise, top among them are digital banking channel enhancements, right? Developing more capable digital channels was job one on most every bank's to-do list, closely followed by omni-channel delivery. No surprise there. But right behind that, customer analytics, and what's not shown in the graph here is the larger context in the question choice was customer analytics to improve sales and marketing effectiveness. So analytics used to move the revenue needle. Seen as somewhat less important in the context of growing revenue is predictive analytics, such as next best action or next best product predictive applications of analytics, and we think they are viewed as less important simply because significantly fewer banks have any experience with those types of applications. The survey also explored some attitudes toward data and analytics, and we show those on the right. And what's being graphed is the percentage of respondents who somewhat agree and who completely agree to these four statements. And the top one is kind of like motherhood and apple pie. The use of customer analytics and data analytics creates a competitive advantage for financial institutions today and in the future. Well, who wouldn't agree with that, right? And indeed, 99% agreed, at least somewhat, and nearly two-thirds agreed strongly. But a bit bolder stance on the importance of data and analytics is the second statement. Retail financial institutions need a data-driven, granular, holistic, and forward-looking view of customers to compete in today's market. What's described there is not your father's business intelligence platform, right? What's being described there is today's state-of-the-art predictive analytics, and just over half of respondents agreed completely with that statement. Below that, a much smaller percentage agreed that senior management is driving data-driven decision-making cultures at my institution, and even a smaller number feel they have the right talent in place. And those two factors we'd like to explore a little bit later. Not surprisingly, marketing is the focus of most current and anticipated customer analytics investments, and those are in keeping with banks' broad-based revenue growth ambitions that we shared earlier. And within marketing analytics, the use cases are multiplying, and you're probably familiar with most, if not all of them, in the list. But beyond marketing are a growing number of other applications of customer analytics. In our experience, particularly in mid to large-sized financial institutions, those are often separate, uncoordinated projects, often with very different procurement activities and different areas of responsibility entirely, and in some cases using different applications from different vendors. And it's the larger financial institutions who tend to have and have been and will continue to use analytics in their operations more broadly. But the fact is, despite the favorable attitudes towards customer analytics, most banks simply don't have experience yet with it. The chart on the right is from that same survey, looking at the percentage of responding financial institutions who have implemented either in a live or pilot scenario, or who have definitive plans over the next year to 18 months to use any one of these technologies. Customer profitability analytics is listed as the most widely adopted application. However, I will say a deep dive into what banks are using in that realm suggests that the use of customer analytics in that case kind of stretches the term a bit, and in many cases the analytics platforms are quite old and really amount to little more than profitability reporting. But nonetheless, you can see that less than half of surveyed banks have experience with marketing analytics, and predictive analytics applications are used by a much smaller minority. So is there a disconnect here? On one hand, we showed that a high percentage of banks and credit unions say customer analytics is quite important to delivering our key business objectives. But on the other hand, we see remarkably few financial institutions, at least in our survey, which is not portending to be representative of the entire market necessarily, but with adoption that seems to be rather lagging. What's going on here? Well, we thought it would be an interesting question to see overall, does stated strategic importance of an application or a technology closely map to its incident of use? You would think it would, right? But what we found was just because a technology is deemed important doesn't mean it is adopted proportionally. So what I'm graphing here is the difference between the stated strategic importance of each of those technologies listed with the stated adoption of those same technologies. Now, you could throw stones at the methods. I get that. But just for the sake of illustration, we find that in general there is a correlation between the two, but at the same time there are quite a few outliers. Both outliers in the terms of those that aren't deemed all that important strategically but who are widely used, for example, social media listening tools, as well as those who are deemed much more important but are underutilized, specifically customer analytics and integrated channel delivery. So anyone who's worked on integrating delivery channels would tell us it's a big smoking deal. It's a difficult and costly project. But what about customer analytics? Does that same thought explain its underdevelopment? Let's look into that. I suggest there are at least 3 reasons for the comparatively low customer analytics adoption. And I'll list them here briefly and then go into just a bit more detail before turning the presentation over to Kambiz. First is all the hype around big data. We've all been there, right? Rip and replace, tear apart your IT infrastructure, you need HANA, you need Hadoop, and you need it now, right? And you need data from all these external data sources, and they need to be real time, and they're going to be high value, high velocity, high variability, and and you know how extremely difficult that is. In our view, many banks, particularly executives, have been beyond distracted. They've grown cynical with these overly hyped claims. At the same time, banks have a wealth of transactional data, never mind big data, call it small data. They have this data available, but most underutilize it. Secondly, management simply isn't leading at most banks, and I'll substantiate that in a moment. And thirdly, in our view, there's a perceived difficulty with data analytics that stems from older versions of the applications that were undeniably more expensive, more time-consuming, more difficult, and required much more in-house expertise to deliver value. And all those things have changed. So the old stereotypes persist and don't necessarily reflect today's state of the market. Now, quickly on each of these things. In Selton's opinion, frankly, forget big data. Work first on small data. Big data is a terrific aspiration, but it is geometrically more difficult than starting with what you already have in-house, specifically transaction data in your core systems. The chart on the right comes from a 2014 study commissioned by IBM and the University of Oxford, and it looked globally, both within and beyond financial services, among large organizations who asserted to have big data initiatives, and this shows the data sources that they've used, and you can see everybody uses transactional data. Typically a minority go beyond that. Transaction data is the obvious and easiest place to start. On the second point, from our research, we find that compared to other functional areas within the same financial institutions, executive management responses to our surveys, showed the least data-driven aspirations and the least mature self-assessment in their organizations. Here's an example of what I mean by that. Recall the question that I shared earlier. Those 52% of responding financial institutions who strongly agreed with this statement that retail financial institutions need a data-driven, granular, holistic, and forward-looking view of customers to compete, right? Only 27% of executive management responders completely agree with that statement. Here's another data point. We asked the question, so how data-driven would you say your organization is? Now, I know that's quite a qualitative statement, and the survey defined it, but nevertheless, it's subjective. And then we followed that with, in your opinion, how data-driven is your organization? How data-driven would it be if it were up to you? In other words, never mind your organization, what are your personal ambitions? And you can see the results of those shared by respondent role. 40% of marketing responders said, yep, it'd be data-driven if it was up to me. More than two-thirds of IT and IS respondents craved data-driven ambitions, but barely a third of executive management respondents even had that ambition. I think of it as this way. They've heard the gospel, but they've not seen it lived out at their organizations. So they're simply not yet believers. They're not ready to take risks with investment and with culture and with resources to bring about an outcome that they're not convinced will occur. This next slide looks at the maturity of data analytics across sizes of financial institutions. What the graph shows for each of three asset tiers, less than $1 billion on the left, 1 to 10 billion in assets in the center, and banks over 10 billion on the right. And I would have liked to have broken out larger financial institutions, but the base size was not adequate to do so. But nevertheless, even among those breakouts, you can see very different profiles of self-assessed analytic maturity. The larger the financial institution, the more mature they are in their use of data analytics. And the four bars in each of the tiers reflect the 4 stages in maturity that are explained on the bottom of the slide. In our observations, we see most financial institutions gain experience in baby steps. They start small. They take a tidy project in a well-defined area addressing a relatively modest business objective, and they work on it until results are delivered. Then and only then do they embark on more aggressive ambitions. And lastly, to the third point, customer analytics solutions have evolved and are now very specialized. And as mentioned earlier, most of the heavy lifting is done. From our view, we see the solution landscape is really bifurcated. There's the group of general-purpose analytics platforms. You know their names. They are large, they are complex, they are powerful, and they are very flexible, but they do require a good deal of configuration and learning and experimentation. But now there are also literally a bevy and a growing number of applications, most of which that use these general-purpose platforms, but they are designed to achieve more specific business objectives with predefined data structures and business rules and analytical models and workflow tailored to meet those specific business objectives. So what's all this mean? It means it costs less money. It means it costs less time and effort to get going, and results can occur faster than even several years ago. So in summary, before I hand it off to Kambiz, profitable top-line revenue growth remains a consistent top strategic priority among most banks and credit unions. And customer analytics is broadly viewed as a key technology enabler in achieving that. Yet, customer analytics remains a nascent pursuit, and it's led primarily by large banks, even though the solution environment is now very well suited for adoption by smaller organizations. And we think, among other things, cultural roadblocks remain a key barrier, with few executives, particularly those in smaller banks, leading the way toward a more data-driven culture. So that means if your ambition is to take a tangible business objective, for example, efficiency gains and effectiveness gains in your ATM channel, you may need to spearhead that project without significant C-suite support. Nevertheless, significant results can be obtained from these specialized customer analytics solutions with both a modest investment and without a big data team. And even the larger banks would say they've got a long way to go to fully leverage available customer data, never mind big data, a long way to go to leverage their own in-house transactional data. So we think start small, start with transactional data, but definitely do start. Kambiz?
Thanks very much, Bob. That was certainly some interesting findings there. I'm going to take some of those and try and give you a use case of what some transactional data looks like and how that fits into customer analytics from our perspective. And hopefully we have some questions throughout that keep coming, and we can answer those as we go along and you see how this relates to your financial institution. I think by now everyone's pretty convinced how valuable starting small customer analytics and transactional data is. But I wanted to take a small step back and really dive into, well, we all use transactional data, but what is it fundamentally? And we have a saying here in that every transaction tells a story, and it's actually the gold mine of all your valuable customer information in your organization. A transaction itself, when you've seen lots of networks before, and it's made up of a myriad of subcomponents, starting at the ATM, perhaps ending at the host authorization, but multiple hops throughout and in between. And all that information has a gold mine of aspects and data about what the customer is doing, where they are, what the value of their transaction is. And being able to leverage that information gives you this always-on data source. from that, it's almost like the pulse of your network. What's happening in the network, how the applications are responding, what is the business value of the transactions, and then more importantly, tying it back to the customer and what is the customer experiencing. If we take I thought this would be interesting to share. This is a 2013 research that Capgemini published, and it was around the factors that drive customer decision making, and it was a view of this derived research from obviously a massive sample set that tries to define what a customer experience index might look like and what the elements are that have an impact on that experience, whether it be the engagement that the customers have with your different products, the type of accounts they may have, the loans, mortgages, where they are in the life cycle, and also the channels that they interact with. Well, if you try and tie that really comprehensive index of the customer experience back to transactions, see that there's very few touch points that are predominantly human interaction that aren't actually captured by transaction data. And actually, if you have easy access to this transaction information, you get a really good lens and a wealth of data into what's happening with the customer. So what can you do from this transactional information? Digging into that, you have data on customer analytics, what's happening, where they are, what channel they're on, and trying to leverage it then to have a more holistic omni-channel experience for the customer and try and view their interactions across the different products, across the different channels, and also maintain that experience as much as possible throughout their life cycle. So, like Bob mentioned earlier, financial institutions, yourselves listening in, everyone's always realized the value of customer data. 53% of the people would like to be data-driven and leverage that completely as part of the organization. And as we've seen with our father's analytics and what's been in the market today, there's really no shortage of dashboards and reports, but the challenges come with how hard that data is, how time-consuming it is to get at. Updating these dashboards and reports are a constant nightmare. And once you have something, it ends up being repeated over and over again with, in a very static manner and limited ability to explore the data that's in there, unless you start another big process of creating a new dashboard and a new report. And our recommendation, to feed off what Bob said as well, is what you want to look for is a solution that can easily incorporate that transaction data, and it's vertically focused, so it has your business needs in mind. And one such example, and I'll give you a use case of how we, of the ATM channel shortly, is our analytics product. And the focus there is around how do we understand the customer experience and their engagement? How can we leverage that information to improve our bank profitability, the top line, sales and marketing, customer analytics? And how do we simplify the reporting nightmare that exists for a lot of organizations today? Now, in a typical financial institution, and notice I've crossed out the word big here as well, even small data has a long life cycle in trying to get that data in a usable state. It all typically, most organizations I've spoken to, starts all the way on the left-hand side where there's a light bulb go off and somebody says, I would like to see this type of data because it's going to bring me a lot of value in making some very important decisions. And then you get into a process that could take weeks or sometimes even months to end up with the data that you wanted based on that brilliant idea right at the beginning. And it goes through the process of finding somebody in an IT or data analytics team, finding their availability, and then going through the process of tracking down the data. It can be in lots of disparate sources, finding where it is, a process of data blending and data munging and cleaning it up and parsing. And you've all had experience trying to do that, even in my little Excel sheet world sometimes, where there's 20 rows, trying to get them to all have the same formatting can sometimes take longer than you'd like. And then building the reports where the idea stems from. And at this point, we're at the time where we can decide if the data we asked for to begin with was the right data, if it gives us the answers we were looking for, or if we need to go back a few steps and start this process all over again so we can get to what we need. And the shift with having a transactional database vertically focused application is now you have an always-on data source. It's up to date when you need it. It's going to give you that dynamic reporting. And once you have it, you have the ability, leveraging some of the analytics platforms that exist and the visualization platforms, to actually make this an exploratory interaction with the data to help you make those decisions. And all that time now gets spent working on the decisions once you have that platform and that data available. It was with those values that we have gone towards Inetco Analytics to be able to focus that transaction data, present it in a customer perspective, predominantly to help with making sure that customer experience is the best it can be and improving the sales and marketing efforts of the organizations overall. And I'll give you an example of that just as soon as I show you how we've put that together. And the crux of it is essentially that we have this ready-to-analyze data that's continuously feeding into analytics. And in our case, that's coming out of Inetco Insight that captures that transaction data and is the primary data pump, if you will, into Inetco Analytics, but making it very easy and creating a Hadoop data store underneath that allows you to bring in any other type of structured data and easily visualize that and explore the data at any point in time and make it accessible to everybody in the organization. So I will jump in here and give you an example of how we could use Inetco Analytics for the ATM channel and what that might look like. Obviously, as I mentioned, there's many aspects to what we could do and what we could use, but given that the customer analytics focus of this webinar, I'll only show you a number of those reports here. And so in the initial report that I have up here and the initial dashboard that I have, customer locations, based on the transaction information, what I'm looking at here is our top 100 customers and their transaction pattern and their behavior on our network. What kind of transactions are happening, and also a view of where these are actually taking place in my network and where they are. this already gives me a very good visual indication of where these customers are, what activity they perform, and the type of dollar transactions I could get down to. What's great about this report is it's completely interactive. I can drill down to different locations, look at what's happening. But say in this instance, I was trying to actually find out, I have a good view of what my customers are doing, but I wanted to use this information and actually see what people who use my ATM fleet are doing who aren't my customers. And by selecting the top 100 there, you get a very different picture of the activity that happens throughout my fleet. And in fact, you can immediately see a few hotspots in terms of high volume transactions, and that's the sizes represented by these dots over here, of areas where people who aren't actually my customers are using my ATMs. And that really presents an opportunity in terms of how am I going to acquire new customers, what kind of offers can I put in place to target these people and actually give them more value than they're receiving today and improve their experience. And not just their locations, but I can also view this data because I have their card information in terms of what bank they actually belong to and what individual banks are causing the most volume of not on us customers, and where should I be focusing my efforts and targeting more closely. Of course, I can dive into a lot of other components, but there are a couple other dashboards I wanted to show you and share with you. So, and if you're interested, you can always reach out to me and we can go through some of that together offline on a one-on-one basis. So in this instance, I'm now looking at my fleet again. You might predominantly look at this for a placement strategy of adding new ATMs, but I'll show you some of the elements and some of the information you can still glean from the customer experience perspective and what value that brings. I have a view of my fleet. Like I mentioned, I can dig into, for example, a cluster of 5 ATMs that I'm interested in. Let's also zoom into that location just to see the type of behavior there's over there. And I can see very quickly what type of interactions are happening on those ATMs, whether they're predominantly withdrawals or deposits, the activity of my customers versus non-customers, and quickly get a view of how healthy they are in terms of the transaction counts. But what relates to how the customers are actually, what the customer experience looks like, is the ability to look at that transaction data and look at their queue times as they're waiting to use those ATMs. Now, I've set this to 2, and that's a depth of 2. That's 2 people coming and using the ATM back-to-back. That's probably not an issue for most people. Let's try and go to a higher number and say if there's if the queue is 5 deep, then you're crossing the boundary where people might actually decide they're not going to want to wait around and use that ATM, and you might actually lose that business as a result. And even then, with similar volume ATMs, we can see that one stands out significantly, where there was over 1,300 instances in that 6-month period where that was 5 deep. And in fact, the average queue length there was 7.1 people waiting to use that machine. So not only is this an indicator of how busy my ATMs are, how valuable it is, the kind of service I'm providing, but also, as I mentioned, how easy it is to bring in additional data. You have the ability to also turn on competitor ATM locations and see what that means for the quality of service you have that you're providing over there. We were looking at this location with the high population density, but if you look very close by, there are a number of competitor ATMs all listed at the bottom from the different vendors that could take advantage of that fact. Although our density is pretty significant in that location as well. However, this might be a good impetus to think about adding a new ATM there, just because of the customer frustration you may be causing in that location. And just before we wrap up, one quick other instance, very high-level view of what you can see in terms of customer interactions. This is a very typical graph in terms of ATM usage, significant withdrawal versus deposit. Other activities are less prevalent. But having that exploratory nature lets us dig into, well, does that apply to my customers or is that my non-customers? And our customers have that view very significantly, but if I look at all the other people who actually use my machines and aren't my customers, you see a very, very different story and a picture, and how you might be able to leverage that information to not only improve the marketing, the screen flow on the machines, the offers that you provide them, or even the ability to notice instances where you have double transactions that are taking over 2 minutes to complete, and how can you optimize those transactions that might be significant enough. I just wanted to give you a quick flavor of what that might look like, and I'll pass it over to Bob to give us some closing recommendations now that you've seen one of the use cases that we have here.
Very good, thank you. So just a few thoughts as you look at not only this sort of application, but any number of broader or additional applications of customer analytics. One is to remember that analytics is a means to an end, not an end to itself. And although it is fascinating to contemplate what can be learned or discovered, the bottom line is to advance a specific a business objective. So successful examples of data analytics, in our view, share a common element of being focused energy to achieve limited and specific business goals. Secondly is start small. Don't try and boil the ocean. And, that's motherhood and apple pie, but it really applies very strongly with this space. There's no end to customer analytics. By its very nature, it is a exploratory, learn and grow and change. It's not static at all. And so there's never any end to it. And so it's important to start small and remain focused. Thirdly, there's plenty of help available to hasten your otherwise steep learning curve if you're new to this. And so Celent's not a particularly good operational resource. We don't help implement, and we're not masters in analytic model management either. So there are others who are quite specialized in operational improvement via analytics, and we would point you in their direction. Fourthly, remember that at its root, customer analytics invites at least some manner of cultural change. Even if your aspiration is not to move your bank to a entirely or radically data-driven organization, there still is a requisite need for cultural, organizational, and procedural changes to make good use of customer analytics. And then lastly, manage expectations. Everyone likes to point to Amazon or Google, right, as extraordinary examples of the use of customer analytics, and I couldn't agree more. But remember, those two firms are not 100-plus-year-old institutions. They're not highly regulated. They don't have multiple legacy core systems operating, right? So there are a lot of reasons why they might make it look interesting. They don't have a multi-channel sales model, right? They've got one or two maybe if you count mobile and online as two separate channels. So life for them really is kind of fundamentally easier to make it look good. And so understand that even if you aspire that kind of analytic acumen, it's going to be a long road, and the destination the road will seem very long at times. And so keep that in mind as you learn and grow.
Thanks very much, Bob. In closing, as Bob mentioned, it's never too late to get started, and it's a competitive advantage. And with all the vertically focused applications out there, you're going to get the benefits that meet the needs of your business. So start small and go out there and start learning more about your customers.
Okay. Thank you, Bob, and thank you, Kambiz. At this point, let's move on to answer some of the fantastic questions that have been streaming in during the actual presentation. By all means, if you have more questions, keep them coming in. We will definitely take a few minutes, even though I know we're running a little bit over, to answer as many as we can. All right, the first one. Where is Ineco Analytics from ATM gathering data from? Kambiz, perhaps you want to start off with that one.
It's, as I showed in one of the slides earlier, it actually comes from the Ineco Insights transaction data pump. And Ineco Insights is an example of a transaction monitoring application that actually sits in underneath the network and can pull out transactions across all the different systems, and merge it without actually impacting the network. So that creates that rich data set that we can tap into and look at the analytics based on the customer information.
Okay. And then, Bob, I think you're probably best to answer this one. What size of bank would most benefit from customer analytics?
Oh boy, I don't think it's a size thing at all. Historically, the task was significant and costly and required kind of not a small amount of internal resources and expertise, and so that limited adoption by the larger banks. And arguably, if your ambition is to say, incrementally improve marketing ROI, well, then the payback would be commensurately larger if you had a big marketing spend. So kind of those things have made the historic adoption skew strongly toward large organizations, both in and outside of banking. But anymore, it is so comparatively quick and easy and inexpensive to get started. We're seeing banks of all sizes jump on board.
Okay. The next question. How does transaction information tell us the queue length?
Okay, I'll take that one. As you have multiple people coming in, for example, in an ATM, you have the cards being taken in and out of the machine, and we have algorithms in the background that, based on the type of behavior that they have and the cart insertions and removals, you can see how quickly they come back to back. And that's a good proxy, typically, we found, for how many people are in a queue and waiting for the use of that ATM.
Great. Now, I know our presentation is running over time, and we will have to wrap this up in about 40 seconds here. But there was one other question, and that is, are Celent and Ineco offering a joint implementation for clients? Perhaps
that would be no. No, Celent is not a implementation resource for financial institutions.
Okay. And last question, is it possible to give a historical report regarding the real-time analysis?
Absolutely. Once you have that transaction information, that data and that metadata is actually very small to